Hello everybody, hope that you are doing very well and welcome to this evening's Contenders live stream where we have got to go over today. I'm going to go over OMG, Chart of the Week, Omnimize Go, and then moving on to harmonic patterns and how I trade them. Just so you're aware, I have done harmonics previously for the champions, okay, so this is a little bit of a review session I suppose, but if I'm honest, I see very few. Oh no, oh no, what have I done here? I think I have the stream open in the background. No, there we go. Sorry. At least I know the sound's working now. Have myself played in the background there. Sorry. But yeah, what I was going to say is I've done this in the past, but obviously with the Vimeo problems, 720p, as well as I don't see many people using them, and obviously the contenders themselves haven't seen them. I think that harmonics are, worthwhile reviewing at the very least. So I'm going to be going over harmonics today. Specifically, well, you'll see what the ones I'm going to go over, and you know, I think harmonics are like really nice to go over today, seeing as we're on Fibonacci, and obviously harmonics are all connections of Fibonacci. Okay, so you need to know how to use the Fibonacci extension, the Fibonacci expansion, and the Fibonacci retracement. They are the core three elements of harmonic patterns. Okay, there is one step, and that's Fibonacci time, but then obviously we're going to be getting to Fibonacci time next week. So yes, that will be like then bringing it all together. So just be aware that you do kind of need Fibonacci time for this. It's not a major part, but it is slightly important for the symmetry. But you'll have that in a few weeks, so it's okay. So yeah, that's what I want to cover today, and then review Bitcoin, because it's just been this has been one of my best weeks of trading. Well, I don't want to say in quite a long time, but it's just been an amazing, an amazingly profitable week of trading for myself, and I'm sure many of you too. With the rise that we've had in Bitcoin, and obviously today a bit of a drop in price, but nevertheless, I think from the stream that I done for you, the last stream price was at around 7,000. 300 or 7,500 was the last stream, and we just hit like today 7,460. So sorry, 8,460. So that like over a $1,000 increase in price, and catching the longs. It's been really great. So I'm thoroughly content with how Bitcoin's gone, and I'm sure many of you are too. So with that said, I don't want to start off with Bitcoin, but I would like to review Bitcoin at the end, give you my thoughts on how this is going to continue to trade. So I'll save that to the end of the stream. But I'm sure many of you are looking forward to it because my predictions have been pretty good, safe to say. So yeah, I'll keep that to the end, and starting with Omnimize Go here. So yeah, this was a bit of a poor trade, if I'm honest, in terms of altcoins, because I've mentioned it so many times. Altcoins do well while Bitcoin is going sideways or moving down, but altcoins do their worst, absolute worst, while Bitcoin is violently, impulsively moving to the upside. And obviously Bitcoin did when I was looking at this, violently moved to the upside, and I think it's fairly safe. What you're going to know what's happening next, but basically it just shot straight through the entry, and I did have an order waiting there. Very silly of myself, if I'm honest. I had my order waiting and got stopped out for about didn't hit my I didn't have a hard stop, but I got entered into it and got then closed out of my position and took about a 1.5% loss in a matter of minutes, if I'm honest. So it was a very poor chart of the week here, but yeah, a bit silly of myself. But this was my thinking, that we had just broken outside of this range. I was foreseeing this low to be taken. Okay, although I was thinking it would help me. I wasn't wanting to see the massive move to the downside, but a long entry on a pullback to the middle of the channel I wanted, which is also confluence with the 786 and also confluence with a high volume node, that stands for, by the way. With Bitcoin being volatile, I expect this pullback to happen soon, which is really annoying because I was expecting this to pull back with the Bitcoin volatility, hence why I didn't want to be aggressive on the highs. But I wasn't expecting so much of a pullback, but nevertheless, yeah, it happens, I guess. I can't do anything while Bitcoin is moving up like it is. I think all alts got destroyed over the last few days, to be honest. Apart from Link done well. But yeah, it was meant to be a short-term trade. The stop loss for me was, well, it was a mental stop because it was more of like a day trade that I was aiming for this. But nevertheless, my invalidation was the low of the range and, targeting that daily resistance. So I wanted to see the pullback really just dropping down and quickly back up, so like a swing failure of this particular low, quickly bought back up from the middle of the range. What happened was you just dumped straight through it like instantly, and then you found a little bit of support off the lows here. You come and back test for a little bit, and then we've got another move down today. So when I load up the chart, you'll see that here's what happens. You move down, took out the low, you got another retrace. Okay, so you got, in the end, we're talking about like 9 sats in total. Like it's about 1.5%. So I'm not going to cry about it, but nevertheless, we got to move down. We got our back test of that channel. You'll see clearer on a lower term time frame. Come down, got our little bit of a back test showing, you know, the loss of this channel, and then you've moved down again. But obviously, Bitcoin being extremely volatile today, yeah, it's likely that that was going to happen, I suppose. But yeah, that was OMG, a bit of a quick one on OMG, because it wasn't in the trade for long, so there's not much to say. I guess, like here I wrote, in hindsight, it was a silly trade to have taken, I suppose. New Bitcoin was not going to, you know, a new Bitcoin was new Bitcoin moving was not going to be good for alts, but still took this one. I think what I should have done, and this is what I generally do, so this is why it was like a really poor decision from myself to take this trade, if I'm honest. Like, don't worry, I journaled it. I journal every trade I take, and this will definitely be one in the book that I have a big, like, what was I thinking? Because generally what I would be doing is having an alert set, and, you know, waiting for, you know, at least the bounce to occur, or at least get the wick and then enter. But on this one, yeah, I don't generally enter so much with, like, you know, bids actually set and waiting for it. I do prefer to, like, get and see a reaction, which is just why it was so poor for me, if I'm honest. Like, uncharacteristic, I suppose, but nevertheless, it was still a loss that I took on this one fairly quick, and, you know, that's OMG for you all. I guess what I could show really quickly is what I'm expecting on Bitcoin, because it does seem like it's moving. Okay, so I am just, you know, we'll see what happens by the end of the stream. But obviously, we bounced off to 618 first. We got a bounce off to 618, which is what I was wanting, and I am expecting one more dip down, very similar to what happened here. Okay, so obviously we had our bounce off to 618, first initial bounce off to 618, and another dip down. I am expecting that to happen, basically. So I'm expecting another dip down, and then it will be either the case of, do we get the bounce off of this next dip, or you know, are the bears fully in control and we just head down? But yeah, definitely I'm expecting this low to be taken, if I'm honest with you, which is currently at 8,009. But yeah, I'm expecting this to drop down. Yeah, so that's Bitcoin. I'll save the rest till the end of the video though, and let's move on to harmonics. Okay, let's try and not get too distracted. Now I've mentioned what I think about what's going to be happening anymore with Bitcoin. Okay, so yeah, moving on to harmonic patterns, and I absolutely love harmonics, as you all probably know. I'm a big, massive fan of Fibonacci, so how can one not love harmonics if they love Fibonacci? You can't, because they you know, harmonics are created from fibs. So I'm just going to read what I've wrote here, okay? So now we have covered the Fibonacci retracement, the Fibonacci expansion tool, and also the Fibonacci extension tool, because you use the extension tool on the cipher pattern. Okay, so the cipher pattern is a little bit more advanced, the same as the 5-0 pattern. So they're more advanced harmonic patterns, I would say. But for the basic tools, you don't use that. So the basic harmonics are just the Fibonacci retracement and the Fibonacci expansion tool. Okay, so, you know, seeing as we have just recently covered those tools, you know, now should know like 100% what you're doing with those tools, how to use those tools. You know, it makes sense to you know, move on to harmonics, because that's the natural progression. That, you know, Fibonacci retracement and expansions are good, obviously, but then when you forge them together and you start to make patterns out of the Fibonacci retracements that you're getting, it's just like goes to a new level. And this is, you know, as I've said at the start of the stream, I've taught this in the past to the champions, but I just see a not often, if ever, really. I know, well, actually there's like 3 people that I know that post them, but they're underused in my opinion, and we got to show some love to harmonics, because they're really, really, really powerful. So yeah, harmonic patterns are not solely based off of Fibonacci retracement and expansion though. They do have to have the correct look. Okay, so what I mean by that is there should, I'm not going to say, oh, it's totally invalid if there isn't, but it really should have symmetry between each of the waves. Okay, and if this isn't making sense at the moment, by the end of the stream it will. Okay, so don't worry. So for example, AB should not move 20% in 1 hour, and then CD for 20% in 40 days. Obviously the symmetry would be down, then say whatever happens on the next leg, and then it's massively sideways for ages. Obviously there's no symmetry between the waves, and what you're looking at is I would say it's not a valid harmonic pattern in my perspective. Okay, so you want to see the symmetry. Okay, and this is where like Fibonacci time comes into place. But again, we'll be getting to Fibonacci time very shortly. But yeah, you want to see that symmetry, okay? Time and symmetry are important factors when trading these patterns. Just because if it doesn't have like a good look, then can be classed as invalid, okay? So just bear that in mind. But yeah. So one always wants to make sure that you never trade a harmonic pattern alone. You need to at least have one other tool for confluence at the level where you are looking to buy. And this fits in naturally to all the Fibonacci tools that I've taught you so far. So just because you go from high to low and you hit a CC, for example, hit that 618, you do want to see another factor of confluence. So you don't just take trades on one Fibonacci on its own. You want to see a confluence of other tools just to give you that more probabilities in your favor, because we all know trading off of one technical confluence on its own is poor probabilities. The probabilities are not in your favor if you're trading off of one tool. So a 618 on its own is not necessarily a good trade. Okay, we want to see these several factors, and if we can get at least two, well then it's doubling our possibilities, let's say. So we always want to see two factors, and it's even more important with harmonics, because the way that harmonics can quickly go from one pattern to another, as I'll cover during this stream. But yeah, that's really important to know. Okay, and officially, okay, and this is where I'm going to differ from if you've ever studied harmonics privately, but officially you are not supposed to trade the C wave, okay, but instead wait for the D wave to finish, but as I've wrote here, I do. So yeah, I trade the harmonics earlier if there's the confluence, because I see a trade is there to be taken. Somebody has to, I guess you could view it like this: somebody is there, somebody's with the orders creating these harmonics to get the pattern to finalize. I am a trader that partakes in the C wave to get to the D. Essentially, I guess, like one step ahead of the competition, while people are still waiting for their harmonic. I guess you could view me as like actively creating the harmonic before it's actually got into its official pattern, I suppose. But yeah, people have, when I've posted harmonics, for example, on Twitter before, I always am guaranteed to have a comment saying, why are you trading the C leg? This isn't a valid harmonic yet. And then, a few days later, I'll come back to them with the pattern saying, well, there you go. What are you saying now? But, it's just, the textbooks are not going to show you this way. So just bear that in mind. People are going to say that it's incorrect, but I counter that, I suppose. So I hope this has all made sense so far. I want to move on to the first one, which is very, very simple, so I'm not going to spend too much time on this one. This is your most simple ABCD harmonic pattern, okay? It's just very, 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 very basic, okay? Because you only have to do 2 steps on it, okay? And this is not, I must say, it's not one of my favorite it's not one of my most favorite harmonics. If I had to list my harmonic in terms of favorites, this would be my least favorite. Not because it's necessarily do worse. I just guess it's my least favorite. Let's just finish at that. So this is the most simplest harmonic pattern, okay? Not difficult at all, and I will load up a chart and we can sort of explain this in some blank space just to make it very, very, very clear exactly how you're getting this, okay? So your first by the way, I haven't mentioned here, but I do only like to trade harmonic patterns on a higher time frame as well. So at the very, very least 1 hour time frames, preferably 4 hour plus time frames. I'm not ever scalping. I don't want to say never, actually, because I have scalped harmonics on lower term time frames, so that's a lie. But generally, that's just say that they're more probable to play out on higher term time frames. Okay, so yeah, unless you're really, really confident, you don't really want to be looking for these on like 3-minute charts. Okay, they will work, but they're more probable and likely to play out on higher term time frames. Okay, so that's something to bear in mind. But yeah, not too difficult, this one at all, because it's a very, very simply from A to B. Okay, so let's envision that we get this. We get a move on the chart from, let's say we got a drop in Bitcoin price, and we go from A up here to B down here. Okay, very, very simply, all we're using is Fibonacci retracement, okay, to get our first leg. Okay, it's very, very simple. From the low up to the high, what we're using here is the 786 and the 618. And all we're going to be doing is envisaging this to turn around between the 618, okay, and the 786. Okay, so as mentioned here, it's very simple. The retracement must be between the 618 and the 786. So this means, I would give it leeway. To be honest, I've wrote it here, but I would give this leeway. If we're talking like the 616 or the 788, for example, you give it a little bit of leeway. It doesn't have to be exact, because as we all know, trading isn't perfect. Okay, you have to give things a little bit of leeway, but not too much, obviously, but a little bit. Okay. We can give a little bit, but you're looking for this C. Okay, so once you've got your impulse, you're waiting for that retracement up. Okay, and it has to be between the 618 and the 786. Okay, once you've seen that retracement and things start to turn around, this is where, for example, you 100% have to see confluence. Okay, you have to see something else, because this is definitely not enough on its own, and this is why I don't really like this pattern as much, because you're gonna see this retracement, you're gonna see an impulse and a retrace all the time, and it's so early in the pattern, I suppose. But it's only just second leg, but you're going to see this retracement all the time. Okay, after every impulse, you're going to get this retracement, and then it either carries on higher and or goes down. Obviously, there's only two options. It recovers from that, or it goes down. Don't really like this pattern too much, but nevertheless, you have to be more careful trading this C leg of the ABCD pattern, because it's not as probable, I don't think, as the other harmonics, but nevertheless, so make sure 100% certainty you've got another area of confluence, because otherwise you're going to start shorting every single 618 and you're going to lose money. Like, I can almost guarantee that, because you cannot just short every 618. But anyway, or long every 618, but anyway, once you got the C leg, this is where you envision the D legs coming down. Okay, and as mentioned here, if the C retraced to the 618, so if you come up to the 618 here, you will target the 1618 expansion. Okay, and if it hit the 786, then you target a 1272 expansion. So let's just highlight this, exactly what I mean. So once you've got this impulse, and let's say you come up to the 618 here, okay, what we can do then is delete this, take a Fibonacci expansion from the low of that move up to the high of that move, okay, put on our expansion, and we would be targeting a 1618. Okay, 1618, and this is where we want to see symmetry. Okay, symmetry is important, so however long this took, we want to see it really take relatively the same amount of time. Okay, and so impulse down 1, impulse down 2 here, and then that is essentially your ABCD. So when it hits the 618 retracement, you aim for the 1618 expansion. Again, if it was the 786, slightly higher, then you can aim for the 1272. Okay, it's very, very, very simple. And then look for the confluence when at the Fibonacci expansion from points either the 1272 or the 1618. Okay, look for the symmetry. Okay, so you want to see these similar in time. Okay, and then you would officially be only entering the long here. So officially you're not going to be trading any of this C, and you would be waiting for this to finish, come down to your extension targets, and that's the trigger, and that's the entry. I would say I would be a little bit more, follow the textbook more so on this ABCD pattern, because unless you get strong confluences at the C retrace, then you might not always take this trade, but you'd look for the longs after this. Okay, take profit is a Fibonacci retracement from all the way up at A down to D. Okay, and you can you're gonna always say look at market structure. So you, for example, have a market structure old support that could flip to resistance here. So don't just go off of fibs. I use market structure more than fibs. So I would be, for example, let's just highlight it. Well, let's load it up on the chart a second. So let's do let's say we had our ABCD pattern, so we moved down, bounced up to the 618, come down to the 1618. Okay, and that was obviously our low and our high. So let's say if I was trading this long, I would long here, put on a stop, whatever we had. Let's say we had some consolidation here before this rise, I would maybe put my stop loss below this area of consolidation and have my stop here. And my first target would be like old support flipping to resistance. So I'd be looking for this as a sort of target, But officially what you can be doing is taking this up from A to the bottom of D. Okay, and put this on standard and look for like a 382 retracement and then a 618 retracement, and then obviously up for the highs. But I prefer to go off of market structure than Fibonacci when I'm looking for targets. Okay, so there's that. I do prefer market structure, and I've wrote here you could use a trading stop. Obviously, if you hit take profit 1, take profit 2, then instead of closing out the trade at the highs, you obviously can let that run with a trading stop. And a question that I also get asked quite a lot is, obviously, let's just load that back up a second. If I'm trading my stop loss, let's say price has done this, okay, and it's hit my take profit 1, hit my take profit 2, and I decide to let the rest run, okay, while the rest is while the rest is running, I've not got a set percentage. Some people are going to use like 3 commas, for example, and say trail my stop loss at 1%. Okay, so whenever this pulls back 1%, I get, you get stopped out. I don't do that, and obviously trail all my stops manually. I never use an automatic stop loss. I like to do everything manually. Okay. Oh, interesting, by the way. Let's just show you what happened here. So we have got this move down to the 6-6. So this is the time that I would either expect that this bounced to or to die, I suppose. So yeah, this is really important where this is right now. So yeah, hitting the 6-6. Anyway, I don't want to get too distracted and commentate on this quite yet. So yeah, there's the ABCD pattern. Let me just see if there was any questions on that. Okay, the only questions are people saying Bitcoin touched 8k. Yeah, it did touch 8k. Hit the 6-6, I realise. And, this is where I'm envisaging the bounce, but we'll see if this is to occur or not, I suppose. So, yeah. Moving on to the next pattern. I myself am trying not to get too focused on Bitcoin, because otherwise I'm very, 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 very eager to trade this right now, but I do need to try and stay concentrated. So try and eat your very best not to distract me with Bitcoin, what it's doing right now. I have to really try and focus on this right now. Otherwise, I'm never going to do it. Yeah, the basic, nearly said basic attention token pattern, just kid you not. The BAT pattern, okay, it's unrelated to basic attention token. But the BAT pattern, and this is what I've labeled here internal. So obviously we have in total, what is it, like 6, 7, 8 harmonic patterns in total. Okay, and these are, I've put them under categories to try and make them a little bit easier to comprehend, or let me say this, it is sometimes slightly confusing, I guess, until you've done them lots. But even myself sometimes, like, I forget the name of the pattern. Obviously, I can remember the Fibonacci combinations, but when I'm, like, looking at the combinations on their own, I'll sometimes forget their name, of which one I'm actually looking at, because at the end of the day, I view them as the retracements, and then, the name is, to me not so important, but I guess when I'm teaching it, the name has to be important. So, anyway, I'm not sure where I was going with that, but yeah, internal, the BAT and the Gartley are internal, and so these are together. I've grouped them together. Okay, so the BAT pattern, okay, is very nice indeed. Okay, where we get and I like trading these ones. So these ones are more for me. Okay, you have more combinations. So the BAT pattern, okay, it starts off very, very similar. Okay, it does start off very similar indeed. It looks like Bitcoin's dropping again, by the way, so who knows, we might not get that bounce. But yeah, this all starts off the same way, and obviously, actually, let me mention that at the end. Don't let me forget the difference between a bullish harmonic and a bearish harmonic. I need to remember to say that. So let me just write it down. Actually, difference in bullish and bearish harmonics. Okay, I need to obviously make a note of that, so I don't forget, because my memory is a little bit poor sometimes. So basically, this would be like a bullish harmonic pattern, and what we see here is an impulse from X to A, and this can be of any size. Again, preferably on a higher time frame. Okay, so on that higher time frame, you get an impulsive wave. Okay. And then for the BAT pattern, what you're going to want to see is obviously the retrace, okay? And this is going to be retracing. It has to. So this is not an if or what. It's a requirement, okay? It has to be between the 382 and the 0.5. You have what's known as a BAT and a perfect BAT. The same with all of these harmonics. You're going to have a harmonic, let's say a Gartley harmonic, and then a perfect Gartley harmonic. For an example, you have a BAT and a perfect BAT. And the perfect BAT is where it hits it. Well, as I've listed here, so the perfect BAT would be if it hits 0.5 Fibonacci exactly, and that's obviously what you want to trade. You do want to trade the perfect harmonics more so than, a 382 BAT. Although it's still valid and you can trade it absolutely, but you want to try and see the perfect ones just because then you obviously have more probabilities. But yeah, it can be retraced anywhere between the 382, okay, the 382 and the 0.5, okay. Obviously, once we've got our impulse loading up our Fibonacci retracement from low up to the highs, and let's say we get this perfect 0.5 Fibonacci retracement, okay. So very nice indeed. Okay, and then from the 0.5 Fibonacci retracement, we are looking for a secondary impulse. Okay, so secondary impulse off of that low, and here we would be looking between the 382 and 886 is technically valid, but preferred is going to be either the 0.5 again. So I like to see 0.5 and 0.5, but as we all know, the 618 is loved in the market. So really, the 0.5 or the 618 is acceptable. Okay, so again, once you've seen that bounce off of the 0.5, you're taking another Fibonacci retracement. Sorry if I'm going too fast, by the way. You'll have to tell me if I don't, but if I'm going too fast. But um, from the highs down to the lows, we're obviously looking for this impulse again upwards. I like to see the 0.5. Okay, I do like to see it bounce off the 0.5. If this is a 0.5, I'd like to see the 0.5 continue. Let's just say we get a 618 here, because cryptocurrency itself prefers hitting the 618, so it's you're more probable to actually see the 618 in cryptocurrency, whereas in the stock market actually the 0.5 is more widely hit and doesn't reach the 618. So that's the difference between the markets you're trading. You have to learn the characteristics. I think the reason of this is obviously the 0.5 is highly used in GAN, and I think the stock market has more GAN traders, I suppose, and also just the fact of Dow theory, and Dow theory is 50%, and obviously people in the stock market love to trade Dow theory, so that's why I think the 0.5 is more prominent in the stock market, whereas in cryptocurrency I guess I do anyway, I love the 618. So that's why I'm going to label this as 618. I know most of my viewers are from cryptocurrency. So, yeah, again, a bit sidetracked there. But here we see our next impulse up to C. And this is actually where I will trade it. So I would definitely be looking to trade this C. And this is where people always say to me, what are you doing? This is not valid. I can prove it with my statistics that I trade the C and I do well. And hence I continue doing it. But yeah, I love to trade this. Again, I want to see confluence. Okay, I'm not going to just randomly take it for no reason, but I absolutely love to trade this, see if there's another level of confluence there every time. But from this C, we want to see the retrace down, okay? And this is where there's going to be the difference between whether you're looking at a BAT and whether you're looking at a Gartley. And it's all dependent on this B, okay? So as you're going to see, the Gartley is the 618. Obviously, this is between the 0.382 and 0.5. I should have waited, I suppose, to explain this, but just know that these two patterns are very similar, and the B wave is what is how you differentiate between them. But here you want to see the 0.5 and then the impulse back up. Okay, from that impulse back up, obviously between the 0.5 and 382 and 886 acceptable, we really want to see the 618 in crypto. From that 618, you want to see a decline in price. Okay, and this you're going to be looking for the 886. Okay, and this is the 886. Okay, between X and A. So let's load this back up. Okay, let's say we start to come down in price. Okay, we start to come down in price. Where we're looking for the reversal, okay, it's going to be the 886. Okay, 886 down here. So very, very nice indeed. So once you've seen this is where officially you can be looking to long this now. Obviously, you have a stop loss set, but you'd be looking to long this. Okay, you can get one more point of confluence, and that's by taking a Fibonacci expansion. Let me load up the cheat sheet a second. But you can get another, obviously looking for the 886 there. But the second, confluence that you can get is looking for an expansion of B to C, of the 1618 to the 2618. Okay, so let me just really make this very clear. Remember, from X to A is we're looking at the 886. Yeah, remember the 886 there. And then the confluence is from the bottom of B to the top of C, and we're putting this on expansion, and we're looking between the 1618 and the 2618. Okay. So if we see this, 886 is clearly between those two numbers, and that's giving us confluence. Okay, sometimes depending on the size of this retracement. So obviously, if this retracement was a little bit, say smaller, okay, let's say that retracement was smaller, and then you could see the confluence line up exactly like this. Okay. Standard, and that's where you can see this, and this does happen. So it's really, really, really nice when you, for example, see the 886 on the 2618 like this, and that's more, if you got like a 0.5 retracement here, then you're more likely to see these numbers line up. Yeah, and I would 100% then trade this into a long. And this is where you have to just be open to longing, shorting. Harmonics are all about, trading it whatever way you're presented. But obviously, you'd be trading your short here, taking profits on the short, and opening longs here to trade it back up, essentially. Okay, once you've got these series of Fibonacci's coming together. So yeah, obviously your point D, and this would be a bullish BAT pattern. Bullish because you finished point D at the lows. Okay, so once you finish your point D at the low here, you would be looking for a long. Okay. Again, stop loss you can just place below the lows, because that would be a total invalidation. If you want to think of Elliott waves, you could say this is 1, 2, 3, 4, 5. This is an A, B, C correction, and then you move up high. if that helps. So yeah, take profit. So this is slightly different from the ABCD. Remember on this one we took for our take profits from the high to the low. Okay, on the BAT you're going from C to D. Okay, so take profit 1 is the 618 of C to D. Take profit 2 is the high of A. So let me visually explain this to you, and I guess it would be even better if I use the proper tool. So let's just delete this a second. So we'll use the proper tool, and that's located by the left here, and it's the XABCD. So let's say we got our impulse down, up, and down to the 886. What we would then do is go from C to D, okay, and we'd be looking for our long position, okay, stops below the low and back up, okay, back up to the 618 take profit 1. After take profit 1 has been hit, we would be looking up to the high of A, okay? Or if 618's hit, again, you could just trail stop losses. So if you get a move like this, okay, if you get a move like this, then you could just trail your stops, okay? And like let it run for longer if you would like. But yeah, that's how you then get your take profits once you've finished the combinations. Okay, and I've just got a few notes here. So with the Bat and Gartley patterns being similar to start with, and both being internal consolidation patterns, you have to measure correctly the B wave to differentiate, as mentioned before. I got a bit ahead of myself, but obviously these two patterns look very, very, very similar, don't they? They're very similar looking patterns. Did I explain the Gartley? I don't think I got to the Gartley actually. I didn't, did I? Did I just skip straight past the Gartley? I literally can't remember now if I've just explained it. I haven't explained this one, have I? Wow. That's my mind going crazy there. Yeah, sorry, I skipped ahead. There. But basically, yeah, the way to differentiate is the B wave, or whether you finish at the 0.5 or moving on to the Gartley, you get to the 618. So essentially, this is the same as the BAT, apart from the exact same process from the impulse. We take our Fibonacci retracement from X to A. We look this time though. A 618, it has to be a perfect 618. Okay, so when we load up the tool here, this has to be a perfect 618. You see this number, I'm pointing, you see the number that's moving there on the screen. It says 678 at the moment. Now it says 829. This is like a shorthand, so you don't have to keep loading up the tool. So obviously you want to see this first down to 618. Try and get this on 618. So you want to see 618. Then you want to see your, retracement back up, and then you want to see this move down again. Okay, so obviously the Gartley, it has to be 618. Okay, so you want to see that on the 618, or I would allow to just 66, but around this region. Okay, it can move through to 66 slightly, but you want to see the closing price around this 618 really. Okay, and then have a guess what the preferred then retracement is. To the upside, it's 618 again. It can officially between 382 and 886, but just like on the BAT pattern, you would look before the 0.5 to the 618. The Gartley is characteristic of seeing 618 to 618, so two 618 retracements, and the amount of times you see this every day is just remarkable. We're seeing Gartley patterns every single day. Obviously, I'm not actually posting these like every single day for you, but you're going to see it when you start using this yourself every day, because yeah, the Gartley is amazing to be seen. But yeah, obviously 618 to 618, and then for the point of reversal, which is D, and again I would be shorting that, so obviously you could look for the longs with confluence for the B, and then again with the confluence you'd look for that short to trade this down to C. Okay, and for the C, the point D reversal between the 1.27 and the 1.618 expansion of BC, or 786 from X to A. Okay, so let me explain that fully. Bitcoin looks like it's losing support, by the way. But from X to A, you want to see this on the 786. Okay, it's from the 786. So I wrote this here. 786, obviously from X up to A. You're looking for the 786, as you can see here. Well, I've misplaced it slightly, but 786 retracement. Okay, and then also for like confluence from B to C expansion between 1272 and 1618. So if I just draw this on the chart, oops, apologies. If I draw this on the chart, you want to see that confluence from B up to C. Might not actually get it in this example here, but let's give it a go. Okay, yeah, you are slightly within that bound. Oh, it says it here, 1.435 to be exact. But this is then the region you're looking for confluence between the B and C expansion and the X to A retracement. Okay, so you want to see that confluence region as well. Just another way. Again, it would be nice to see another form, something other than Fibonacci. So another form of technical analysis could just be market structure, but you want to see something else at least. An exponential moving up. A whole list of things, but you want to see something else aside from Fibonacci. So outside of the Fibonacci world, being a confluence. Okay, and then on this one, okay, so it's very, very similar. Take profit 1 from C to D. You're going to be looking for that 1618. So let me draw this up, because this is where the patterns have a little bit of difference of how you do the take profits. So obviously on here, you're looking for, let's put it on this, you'd be looking to trade this up to the 618, okay, or alternatively, is a one-to-one extension of X to A. Okay, and this is how you would do this. So this is why you need to have a knowledge of the extension tool. So what you would look for is the length of X to A, the one-to-one of that from D. Okay, so we wouldn't need this for now. Okay, and then obviously, so let me just draw that one more time so it fully makes sense. From the one-to-one of X to A from D, okay, and then you would look for this one-to-one up like that, okay, and guess what this is? Well, it's just a one-to-one extension, and you also want to see the same sort of time this took to the amount of time this takes, okay, and then that's your Gartley pattern. So many examples of this trading out, okay. There's just, the Gartley happens every day, so it's just amazing. There's just so many examples of the Gartley, but yeah, really nice. Really nice harmonic pattern, okay. So yeah, and obviously the way to differentiate between them is whether you are where your B leg was, whether it was the 0.5 or the 0.618. Any questions? Let me see. Is it only in bear, or can you also do in the inverse? Yes, absolutely. You can reverse all of this. Okay, so this would obviously be, for example, a bullish harmonic, and if you just I think we can do control here. This would obviously be our bearish. So this is our bullish harmonic pattern, because point D is at the lows, and if we flip the chart, while point D is at the highs, that's obviously our bearish harmonic pattern. Okay, so that's they are, that's what I wanted to mention earlier. But so with the ABCD one, okay, that was the question. So here, if you go ABCD, this would obviously be a bearish harmonic ABCD, because point D is at the high and you look to short that down. And if it looks like this, point D is at the lows, this is a bullish harmonic pattern, and you would look to trade that higher. Okay, so yeah, it literally depends where your point D ends. If point D ends at the low, this is a bullish Gartley harmonic. Just literally flip it. Everything stays exactly the same. You just flip it, and if point D ends obviously at the high, then it's a bearish harmonic pattern, and you would naturally look for short positions off of that. Okay. Not so much a question, but the guy was Matt said I should be drinking out of a crystal clear champagne saucer. I'm a what's the right word? Modest, easygoing. I'll happily take my pint of water. Yes, invert I, and it's very helpful indeed. For example, if we do take a quick, well, yeah, it's just very helpful just to flip the chart. It can help you with biases. For example, if you think something's looking really bullish, flip the chart, Alt and I at the same time, flip it, and it can help you with psychologically to think, oh, that's actually not so, just it's nice to flip the chart. So yeah, that was a bonus tip. But Dell's answered you anyway. Cool. Yeah, so there we go. Yeah, I'd be a bit careful with Bitcoin, if I'm honest. It does look like it's still dropping, so you want to be a bit careful. It's clearly not. It's just doing like this, isn't it? So instead of getting that bounce and you wanted to reclaim the highs, it's literally just doing this at the moment. So you don't really want to long that just yet. Anyway, moving on. I don't want to get distracted by Bitcoin. So the next is external harmonic patterns. Okay, so these are our external butterfly and I've not changed the labeling up here, but crab. Okay, so our butterfly and crab, these are external harmonic patterns, because obviously they are breaking the lows. Okay, so whatever your low is of X, this is coming external from that. hence it's obviously different than your bat and your Gartley. We're now coming into the external region, and the next two that I want to cover here are the butterfly and the crab. Okay, what you will notice, or what you might notice, is that for example, the bat here, you see how the bat can easily turn into the crab. Okay, so this is why you have to be a little bit careful, because starts off very similar, or for example, this could be a Gartley 618, and then this could turn into a crab. So this is why you have to see confluence when you're longing the D, because otherwise you could long D here and then it turns into a crab, and you're like, oh, what the hell, I just longed here. That's why you need to see confluence. Okay, it's really, really important that you get that confluence, because these patterns, if you don't, well, I guess your utmost important is risk management. At the end of the day, we all lose trades. Like, it doesn't matter if you lose a trade, because, you know, absolutely there will have been times, 100% I can guarantee you, where I would have taken a long on D thinking that it's a Gartley, and then you drop down lower than expected, and you end up being a crab pattern, for example. That's just part of trading. There's never 100% guarantee in anything in trading. It's a game of probabilities. And that's why, while trading these harmonics, just make sure that first you see confluence, because you want those probabilities in your favor the more possible. And secondly, risk management is just obviously the utmost importance, because, yeah, trading, you just need to have good risk management. So just make sure you have that on lockdown, and then you lose a trade, it really doesn't matter. Anyway, moving on. So the butterfly here is obviously from X to A. They're all starting off very similar here, but the butterfly is obviously different than the bat and the Gartley, because you're coming to a heavier retracement, and it has to be the 786 of X to A. Okay, so if we draw this out, we do draw this out here. Okay, impulse, we're looking for the 786. Okay, and we're obviously coming down lower. Okay, so from the 786 to X to A, then price gets a heavy retrace, and we're looking obviously, because that is a deep retrace for B. 786 is considered a very deep retrace, and then obviously because of the deepness of that retrace, bulls cannot quite recover, break the high, and chain get back to bullish market. But what you see is the deep retrace followed by an attempt from the bulls, which is ultimately too weak, and you go down. So like, what you want to see, for example, here is an increase in price. And then on that increase in price, you want to see, for example, bull volume going down. So declining bull volume, I've not got this wrote down, so this isn't a bonus of being in the stream. You want to see a declining in price. Okay, so volume going from X to A. You want to see price moving up, and you want to see volume going down. Okay, this is quite important, actually. I probably should have wrote on the cheat sheet. But yeah, from A to B, then you want to see the volume increase for the bears. Okay, so on this, you want to see price going up on green bars of volume going down. Okay, so price is moving up on decreasing volume. And then on the decline, you want to see this decline to the 786, a strong heavy retracement on increasing red bear volume. So the selling pressure is coming up as you're going down. And then again, from B to C, what you want to see is price to rise from B to C. This is very, very, very important. Okay, you want to see this increase in price, and you want to see the volume, decreasing again. Okay, so it's hard. I should have, yeah. Anyway, you want to, so really, really, and this is actually quite important for all of these patterns. But so from X to A, price moving up here, because this is a bullish harmonic actually. So while price is going up here, you want to see the price going up and the green bars of volume going down. And then while you're going from A to B, you want to see price going down here on increasing bull volume. Increasing bear volume, so the red bear volume. I'm really sorry about that. And then from B to C, while price is then trying to increase, you want to see price moving up on very low volume. Okay, so that's just showing you maybe price is moving up here. So when price moves up on low volume, you could say, let's say you shorted here, price moves down to the 786. That's a lot of profit. People that have shorted the top here, when it comes down to B, a 786 retracement, people take profit. Okay, so that's how you can move up on low volume, because smart traders are, essentially closing their positions here, and as price comes back up on declining volume, so you want to see, for example, open interest declining, that's showing you people taking profits. So you get your increase in price, volume very low, open interest going down, let's say, it's leading to a bearish scenario. And then once you hit C, again, you want to see some confluence here. 618 is the most common, but it can be between the 382 and the 886. You want to obviously get into your short positions and, trade that straight back down, okay, and breaking the lows. I was going to mention something very important there, and that was, it was in my mind. I forgot. literally four. Yeah. Anyway, so you want to see those signs on the C wave, and this is why I like trading C, because it's so easy. If you have access specifically for Bitcoin, or if you're in the stock market, you can just get this off of so many websites. But Trading Technologies being my favorite. But you need access to some sort of footprint chart or open interest, okay, and so you couldn't do this. You could do it on altcoins looking at volume, but you don't get open interest stats on the alts. So obviously, because they're not futures. But yeah, what you would see here is just a move up, and on Bitcoin it's very easy to trade. So yeah, once you've hit your C, so let's just put this in. Okay, we would like to see the 618. So looking at this number moving to this 618, let's say. Try and make this a little bit. So 618. Okay, brilliant. Once we've hit the 618, we are then looking for an impulsive move down. And again, on this move down, at the start, you're going to see an increase in, you'd like to see this increase. If you're trading the seed wave, this is, okay, because many people are not going to trade this seed. They're going to wait for the D to finish, okay? But if you're trading the C here, obviously when you're taking your shorts, you would like to see the increase in bear volume. As people that have shorted here take profit while they re-short, okay? You'd obviously like to see, a little bit of increase in bear volume, if I'm honest, and then dying out towards the end, obviously. So increase it, so big bear volume here, and as you move down lower, the bear volume gets less and less and less, because obviously you're wanting to long at point D. So if this is moving down and bear volume is going bigger and bigger and bigger and bigger and bigger as price is going down, well, that's a massive red flag not to trade point D, because you want to see price as it gets down to the lows of D actually decreasing, because yeah, 100%. If price is moving down and bear volume, okay, is increasing, it's a massive, massive red flag not to long point D, but rather just stay in your short position. Okay, so that's really important. But basically, what we're looking at is point D between the 1618 and 2 expansions of B and C. Okay, so if we just load this up a second. So from B to C, we can go from B up to the C and put this on an expansion. Okay, and what we could also look for another form of confluence is between X and A. Okay, so B to C, 1618 to 2618, and then between 1272 and 1618 of X to A. Okay, so this is another one of X up to A. And we could say, for example, there would be some confluence here. Obviously, not a 2618 or 1618 exactly, but it's in the region, the 2 and the 1272. Okay, so between the 2 here, 2 extension, and obviously the 2.272. I guess I could line this up here. Okay, and then say, well, this is very nice indeed, isn't it? 2.281. 2.618 and 1618, something along those sort of lines. You want to see those little bit of confluence lining up, or at least in the regions that one would specify. Okay, so yeah, best trade entry is when AB equals CD 1272. So what I mean by this is A to B. Okay, so you can take a Fibonacci extension from A to B and then do it like this. Okay, so you could also do, if I just remove this a second, okay, you can also look for this A to B, tap twice, okay, and look for, I have not got it added here, 1.272. Okay, so 1.272. Obviously, this though then would come out of the bounds of a 2.618 extension, so that's to be aware of. But A to B, 1272. That's how you do it. You just take your Fibonacci extension, click twice. Okay, but yeah, and 1272 expansion of X to A. Well, I'm basically just repeating myself what I wrote there, I suppose. Yeah, I've literally just repeated myself there, so apologies for that. But yeah, I didn't repeat my. What I'm referring to here is 1.272 expansion of X to A, whereas obviously I've wrote from X. Yeah, I did write that there, so I'm not sure why I wrote that twice. Apologies. But essentially, once you've seen that confluence at point D, then you would be looking obviously for a long position, because point D is at the lows. This is a bullish butterfly harmonic pattern. Okay, so you'd look for the confluence here and confirmation of entering a long position. And your take profit one would be point B. Okay, so that is very simply, okay, let's say that we are entering in, let's say this didn't go quite so heavy, and let's just put it here. Okay, and we were entering a long position. Okay, we could have, again, I would use stop loss off of market structure, not off of the fibs per se. So I'd want to see something like this. This was an old area of consolidation before the rise. We would look to use our stop loss below this area of consolidation. Target one would be point B, okay, and this is what I would be looking at, I guess, is X, because this obviously was a pivotal point. Maybe you got an increase back down, something like this, increase back down and back up again. So point X to point B are both going to be important, you know, see whether there's confluence, I suppose. But yeah, point B. Okay, I guess here, looking visually, that would be nice to see like this, wouldn't it? So if we put on, you know, see like this, point B lining up with a 618, well, clearly that's going to be an area of resistance. Okay, and yeah, take profit 2 to 618 of A to D, so up from A all the way down to D. Okay, again, I do prefer to use market structure, but from A to D, second take profit, you could use the 1618, okay, because we know the 1618 is in the market, or just the 618 here is in the market, so you could look for a take profit 1, okay, take profit 2, or take profit 1, let the rest run and trail with higher lows. It's obviously another example that you could look to do this. Okay, moving on to the, which is, everyone fully understands that one, yeah? Alexander, your cheat sheet indicates that point D indicates a long or short. Absolutely, yes. Is it necessary, therefore, to wait for a market reaction before trading any harmonic pattern? Okay, so really good question. So let's put on a harmonic here a second and answer that. Harmonic. Let's say we got this one, and let's say we're waiting for a confluence. So the question is, should we wait for a reaction? And I would say arguably yes. So let's say this is moving down. Okay, this is moving down. I would always generally be doing this now. This is one of the things that I've started doing a lot, and that is waiting for confirmation. So you want to see a first bounce, low, take the high. That is then giving you a reactionary bounce. You could take the first low as a really aggressive stops below the low. I prefer waiting for a little bit of a confirmation. That's then taking the high, because then you form your low, higher low. This is your higher high. Okay, and you could even market buy as it goes through, or look for that buy the pullback. Okay. So yeah, I would say, yeah, generally, if I'm honest, I would be more the conservative trader and wait, obviously, you know, see that first bounce, wait for the rise, wait for the higher low, wait for the high to be taken, even market buy over the highs, just stop market will do that for you, or wait for the high to take and then wait for that next retrace, obviously then giving you your higher low, and then you buy it again. Okay, so yeah, I would say, Alex, that you do want to wait for a little bit of confirmation that the market's giving you, that the chart's giving you. Okay. So yeah, I would advise, not financial advice, I would recommend, I suppose, that yeah, you wait for some confirmation. Does the declining volume XABC and increase in volume AB apply to all patterns? Yeah, pretty much so. It should apply to all of the patterns. That obviously on the first impulse, well, I guess it's different. For example, on like well, let me run through them all quickly. So obviously from X to A here can be any type of volume, because it's internal consolidation. So I guess like on the internal ones, then the volume is not going to be quite as important, because let's say you want to see an increase in volume from X to A. Okay, to make this very simple. Okay, from X to A, you want to see the increase in volume. Okay, so volume increasing. Okay, and then when you come down on B, you want to see that volume decrease. And then really another rally from B to C, the volume can stay low. Doesn't really matter. You think of consolidation. So just if I try and think of take this away from harmonics, just think of consolidation in general. Think of this, if this makes it easier, think of this as some sort of bull flag. So impulse, consolidation, impulse, if that helps. Obviously, while you're consolidating, the volume goes down, doesn't it? And then it increases again as you impulse back up. Okay, so I hope maybe that made it easier or not. Let's wait and see. But yeah, basically on your internal consolidations, you want to see the increase in volume on the rise, and then if you're longing here to, you know, expect higher prices, then obviously your consolidation should be on decreasing volume. If you are coming down here, okay, let's say you're coming down from C to D and the increase is, you know, bear volume is increasing, well, that's when you're more likely going to go from a bat to a crab, because as volume is increasing here, that's clearly a red flag. You don't want to be longing something where the bear volume is increasing on the way down, and that would be the best way to really then say, well, I'm going to get a bat or I'm going to get a crab, because if your bear volume is increasing, well, it's much more likely you're going to get a crab, and this is why volume is so important in trading. So yeah, basically on these consolidation patterns, you want to see the increase in volume. Let's say this is a bullish pattern, so you want to see the increase in bull volume, and then during the consolidation of these three legs, you want to see volume decrease, and then as you long here, you want to see that volume increase again. Okay, same with the Gartley, if I'm honest. You want to see the increase in volume, okay, and then a decrease during consolidation before another increase in price here. Obviously, you're looking to long D. You want to see then volume come back and increase. Okay, with the butterfly, very similar to the crab. Okay, if you're longing here, then you want to see, this move up on, really you want to see this move up on less bull volume and then decline on higher bear volume, and then move back up as people take profits on lower bull volume before you start to get your decrease from C to D, starting on high bear volume. And as you move down towards point D, you want to see that bear volume start to decrease until you get to the low, really, and that's where you're then looking for your D. So volume is, to a certain extent, quite important in these patterns. It's not like an all be all sort of thing, because Fibonacci, I would say Fibonacci is a higher priority, because you are set. I guess you are trading a series of Fibonacci points, but it would be naive to ignore volume, because volume is just so crucial. So yeah, you want to use volume as like a confluence. Really, it's not wise, I suppose, not to look at that. But yeah, you do want to look at the volume. Okay, so ending here with, let me see if I had another question. Does C to D have increasing bull volume? So I guess this is on this pattern. So if you're going from C to D, no, you wouldn't really see this increasing bull volume. You would see bear volume like die out. Okay, which is just showing you selling pressure is becoming less and less at the lows. If you're moving down on decreasing volume, that's bullish, so that's why you get your long in. And the last question here, Daniel, you mentioned that bat and Gartley pattern forms every day. Does that mean you trade those two on lower time frames? Yes, to be honest, yes. Yeah, I trade. I mean, when I show you my charts, I don't. Well, I guess I do sometimes, but I don't always actually list the harmonics. But the amount of times that I've shown you a Gartley and you probably just haven't realized, it's so often. So yeah, this is where I kind of go against what I'm teaching, because I say, especially for a beginner, if you do try and do this on the low, I'm just saying it's more easy to get caught out if you really don't know really confidently what you're doing with these fibs. But it's easy on the higher time frame. The reason I say this, by the way, is I always say to people coming to me wanting to learn that higher term time frame is easier to trade. Why? Because let's imagine that you're on a 4-hour chart here. You have all the time in the world to plan this and think, well, you've got time to review the volume, you've got time to look for other confluences, you've got 10 hours in a day, possibly. You got the whole day to review this trade you're going to take. The difference is when you're scalping on the, let's say you're scalping down on the 1 minute chart, whereas the swing trader has a whole day to think about this, a scalp trader has a matter, let's say 10 minutes to look for the confluences, look at the volume, look at everything that you want to look at, and you have 10 minutes to make the decision. Hence, scalp trading is so much harder, because if you're new to this, trying to get those confluences and then think of your thought process, enter the trade, enter the stop loss, enter the take profit, all so quick, you're probably just going to lose money. Because if you try and take things on that you're not good at straight away, you're just going to lose money. So that's why generally I think this is better on a higher term time frame. If you're a bit newer, not to say it doesn't work on the lower term time frames, but you have to be very, very, very quick with what you're doing. Analysis has to be like spot on and quick. But yeah, you see these a lot on lower term time frames. Just be a little bit careful, I suppose. But if you feel confident, then absolutely, I want you to have the confidence to try this. It's just maybe don't try it straight away. I don't know. But yeah, the crab pattern. Okay, very similar to the butterfly, but instead of the 786, you're looking between the 382 and the 618. Again, 618 preferred. Okay, so if you go below the 618, then you got a butterfly on your hands. But if you don't go below that and you stay between 382 and 618, you've got a crab on your hands. Okay, and again, 382 to the 618, you want to see very, very similar, isn't it, to looking at the bat here. Okay, but crab from the B to C, you then want to take your Fibonacci retracement from A to B, see this come up between the 382 and 886, but preferably seeing the 0.5 and 618. Okay, and that's just fib retracement A to B. And then to get point D, where you're looking for the long, point D reversal is between the 2.24 and the 3.61 expansion of B to C. So take your Fibonacci expansion from B to C. You want to see this come down between the 2.24 and the 3.618. Okay. Expansion of B to C, and also what you can look for is a 1.61 expansion from X to A. So take a Fibonacci expansion from X to A and look for that expansion to be the 1618. Okay, so hopefully very clear. And you could also see A to B. Okay, so let me just do this because otherwise it might get a bit confusing. So we were looking at the crab. Yes, crab. So we were looking at this. Let's say we get a 618. Let's say we get a 618. More or less. And then let's say we move down to the 1618 here. Let's just say, yeah, we get here. Okay, so we're looking at this. So what we could look for the confluences, obviously from X to A, put on our expansion. You don't need to necessarily do this all the time because it's going to tell you the number here. But, you know, from B to C, we can look for another Fibonacci, bit of confluence here. Okay, and those are the two ways that you can get confluences. But again, you don't need to keep taking these fibs all the time because it literally says the number there. But, you know, and then the last way that you can go is from A to B, and just double click twice and you see the 1618. So we could say that this is really nice confluence with the 1618 expansion here coming up to, let's just say this is a 3618 coming up onto the A to B, the 1618 expansion here. And let's say, that would be really, really, really strong confluences to look for the long, okay, because D is at the lows, obviously a long position. Stop loss, again, this is, I prefer to use market structure if I'm honest, and I did make this cheat sheet a while ago, I suppose, back in May, but 1618 expansion of X to A, you can, I guess you could use that, but it just makes more sense to use market structure in my opinion. It does make a bit more sense, but it's just hard to show that because obviously every example is going to be different. The reason why, for instance, I've wrote this is because this is fixed, this is obvious, and that cannot change. That's just stop loss below the 1618. The 1618 cannot change. It's a fixed mechanical system. Whereas consolidation, what I view consolidation, what you view consolidation, is going to be a bit of opinions, isn't it? So it's not a hard fact. But yeah, I use market structure, but yeah, stop loss, let's just say, to place below the 1618, I use market structure, but here's a hard rule that you can have. Take profit 1, 618 of C to D, so take your Fibonacci retracement from C to D, look for that look for that 0.618 retracement, take profit 2, the high of A, or you can just trail your stops. Yeah, and those are the 5 harmonics that I covered today. Does anyone have any questions? Okay, so the question here is can I explain the bearish butterfly? Yes, so let's just draw a butterfly, for example. Okay, so let's just do this. Okay, so obviously this would be like our bearish butterfly, bullish butterfly, because we have just expanded down to D here. Our bearish butterfly, so this is bullish butterfly because point D has ended at the lows. This is our bearish butterfly. Okay, so our bearish butterfly, we would have moved down, back up, back down, and then back up again. Okay, this is a bearish butterfly because point D is at the top. Does this make sense to you? To explain if it doesn't, but yeah, this is the bearish one because point D is at the top, and this is the bullish one because point D is at the lows. Okay, it's the exact same Fibonacci sequences that you use. It's just obviously whether was your starting impulse down or was your starting impulse up. Okay, great, thanks. No worries at all. Beside the candle color, how can you differentiate between bull and bear volume? All trades require volume. So when you say bull or bear volume, do you just mean volume during bearish move? easiest way I can explain this is, for example, looking at Bitcoin right now. So shall we see whether this is moving down on increasing volume or not? Okay, so if we just load up volume here, just remove this side a second. Okay, let's go down onto a lower term time frame. Okay, it's not the easiest example because volume increased halfway through the move. But what we could say is like this volume is, let's just load up an easier, really obvious chart. Okay, actually not a good example. Okay, so this is a good example. So this is how you can differentiate. So let's say we were moving down here. Okay, so price is clearly moving down. Okay, price is clearly moving down. Let's say we were coming up to a bullish harmonic pattern and we have all the confluences down here. Okay, and we see volume declining. So we see volume declining as we're getting to our, like, you know, our target area to enter this harmonic. Okay, we get our bounce of follow through and the move back up. This is obviously, we could enter the long as soon as we get the reaction, the low high taken, or wait for that retrace. You would have taken the long here and, you know, be in profit right now. So this is what you want to see. So the volume is very key. You want to see this as it's coming down for a bullish harmonic, volume decreasing as you come down to your support, and then that's where you want to see the volume increase. And funnily enough, here on Ethereum, you did get this increase in volume. That's exactly what you would want to see, and would you look at that, price moved up. So there's no real surprise. So that's what you want to see, like the declining in volume. If we were seeing price move down here, but we were seeing this bear volume being really high, each time getting higher, well, just, you don't want to be buying here, do you? Because selling interest is increasing, not decreasing. You want to see it decrease if you're looking to long, and that's what happened there. Okay, so I hope that makes sense. Daniel, when you see an harmonic pattern with the experience and confidence that you have, also with confluence of other indicators, how can you control putting orders? Let's say times. I mean, this is really personal because myself, I don't really use leverage. When I trade, even if I'm scalping for 0.5%, I just don't need... This is personal to me, so it's like, really, you're not going to have the same opinion, maybe. But I just don't use leverage. But then I have a lot of Bitcoin, so it's like... You know, I just don't need to use leverage, if I'm honest. Whereas someone with less money, or maybe it's just the case of they don't want all their Bitcoin on an exchange. Okay, I don't have all my Bitcoin on one exchange, but I have enough to not worry about leverage, I suppose. But let's say you only have $100 on the exchange, and you know you're worried that you want to take on some more risk. I mean, I wouldn't advise that. If you have $100, trade with $100. Don't start using leverage if you're a beginner, 100%. But let's say you are a very experienced trader. Let's say I just have $100 on the exchange, okay, and I want to enter a really, big trade here because I've seen all the confluences. I mean, myself, I would use leverage, to be honest, but I would try and keep it down. There's no need to go over times 10 leverage, okay? If you start using times, let's say 50 leverage times 100 leverage, all it takes is like 2.5% to move against you and you're out of the trade, and it's just too much risk. So yeah, times 10 is the most. Really, I guess you could go times 25. You have quite a bit of leeway with that. But yeah, you don't. Let's just say keep it under times 15 leverage. You don't need to go over the top. But in general, I would say, I when I was starting trading, I did use leverage. So I cannot say don't use leverage. It's a bit hypocritical, I suppose. But I think I would try and say if you don't have the money to enter that trade. Just trade with what you've got, and obviously the gains will take longer to it. Your USD value of your portfolio is going to take longer to increase because you've got less capital. But if you start using leverage as a beginner, you're more likely than not, instead of getting quick gains fast, actually lose all your money fast. Let's be honest. So yeah, you want to be really careful with leverage, but let's say you really want to use it, then you don't need to go over times 10. Dan, when you're using volume moving average, well, the volume moving average is just really helpful. So what we can see here, okay, is well, on the flip side, I guess, what you can see is price was moving up here while volume was pretty much decreasing, we can say. this impulse to this impulse to this impulse to this impulse, okay, volume was declining very clearly there because the spikes were getting smaller and smaller and smaller and smaller, and obviously price is rising. So what is that? Bearish. This moving average line is just helpful to show you exactly what the average volume is, okay. And then you can see here price increased while volume went down, bearish. You reach a top here that was followed by a big spike in bear volume, higher than the last spike in bull volume, and what do you get? You get a decline in price. So I mean, it's not really too you know, you could trade looking at volume, to be honest. Volume is really, really helpful, but yeah, that's why you use the volume moving average, because it just shows you how much volume is occurring. How relevant would the POC on volume profile? Yeah, really good confluence. You know, if you see, for example, point D coming down to the POC, well, that's obviously a really good confluence to have. Okay, there'll be very good del. So yeah, POC is a brilliant confluence, or just a high volume node. Okay, cool. Thanks for clarity. No worries at all. I will go through Bitcoin in a second, and I'll check that out to double check that. But yeah, 100% POC with another level of confluence from the harmonic is really good, really good. Are you going to make tutorial videos on how to use all different exchanges you are on? Right now, I've signed up for BitMEX and I have no idea. I mean, I don't think my time is well used telling you how to use BitMEX, because I think that you can just like Google. If I'm honest, I think you can find an exchange on how, you know, a video online of how to use BitMEX. You know, I don't think my time is well used to show you how to use BitMEX, if I'm honest. You know, it's not too difficult. You can just find an example online. It's really easy. I think I even have a video. Actually, I'm pretty sure I have a video on my own YouTube. I can link you it. So yeah, mate, no worries. I'm not trying to be like condescending here, but I'm just saying, you know, I don't think my time's well used for that. But yeah, I'm pretty sure, if I'm honest with you, I do have a video on my YouTube itself actually going through BitMEX. It's really simple though. Buy, sell. Yeah. If you still get stuck, then obviously come back. But I do have a video on how to use BitMEX. All I use is BitMEX and Binance, and I also have a Binance tutorial on my YouTube as well. So yeah, there's that. So yeah, I have a video online for this. Look at this, by the way. It's recovering really nicely, Bitcoin here. So it is come a little bit lower, but nevertheless we are recovering here. So not all is bad. Getting the bounce a little bit lower than I thought, but nevertheless getting this bounce underway. Yeah, no worries at all. Yeah, I'm not trying to be like mean or condescending, but I just do think I don't see the need for me to go through that when you can like just Google or yeah, I have a video. If I'm honest, I have a video on using BitMEX. So just like go onto my YouTube and you'll find it. Or message customer service, they'll link you to it. Or I'm sure someone in the group would link you to it as well. But yeah, cool. So that's all the questions done. So I presume everybody has now understood these harmonics. Which is really good if that is the case, because I love harmonic patterns. And with that said, I would now like to talk you through Bitcoin. Okay, so we can see actually we're coming back up and testing 8K. Okay, so well, look at that. So a direct flip. Okay, direct flip as it stands, you know, we're on the 5 minute, but a direct flip of support, you know, see that bounce off the 618 there, lost, coming back up, hitting the 618, and possibly, you know, either getting a higher low and back up, or at the very least we're seeing a pullback at this 618, aren't we? So that's happening right now, and that's obviously support, resistance, so that's not too much of a surprise, I suppose. But yeah, Bitcoin over the last week, I mean, this is where I have to say that it's traded very nice. Okay, if I'm honest, it has been really perfect. Obviously all started from if we just come out to a higher time frame here. Okay, I don't want to spend too much time on this because I've already done like videos on this, but obviously it all started from this symmetrical triangle impulse. Symmetrical triangle, what do you expect from a symmetrical triangle? You expect continuation. Continuation happened in the end. We went, you know, It's just really nice. You get the symmetrical triangle, you get to continuation, you come back up to your weekly. From there, you go from low to high, come back down to your CC, also holding the trend line support, move back up again. From moving back up again, we obviously broke the weekly, and then what you done here was just perfect. You come back, broke the weekly, back tested weekly, back tested weekly, back tested weekly, wicks through the level, closing back above, show that the support is being held, just as you saw here, wicks through the level, close back above, showing you that the trend line and 618 is holding. Here you break weekly, wicks through, close back above, shows you that weekly's holding. So, here was reasons to be bullish. Then from that, you obviously move back up again to 8,000 psychological. From 8,000 psychological, you went from low to high, hit the 618 before another retrace in price. If you look at this, it was just perfect. I just want to go through this because of how perfect it was, if I'm honest. But obviously yesterday, I gave you a massively important support of 7,738. That was the support to be, essentially longing. The better, closer you get to these support levels that I give, the better the risk to reward is, I suppose. But obviously, this was a short that we took as a group and shorted this 618. Come down to that key level within $2. Found support, moved back up again, got a little retrace before ultimately coming up to our daily. Okay, that then leaves us to where we are right now. Okay, so where we are, well, today. It's a bit funny because it's basically an exact copy of what happened yesterday. From high to the low to the 618 to moving down again. From the high to the low to the 618 moving down again. Like, how similar are these patterns? Really, really, really similar, if we're honest. So there's that. They're very, very similar indeed. And this was the prediction that I made today of how I thought it would trade, by the way, where I thought we would retest this channel, drop back down, come back up to the middle of the channel 618 before moving down. Well, I was envisaging us moving down actually to around 8,080. Obviously, we have broken through 8,000 and this level of 8,080. So we have broken through this support. But, pretty similar to how I thought this was going to go this morning, which was like this. Okay, so it's pretty similar to this prediction. But nevertheless, we've broken down a little bit further than what I would like. But I guess, really, let's just come up to the daily a second. Yes, it's really not the end of the world, because what we've done so far is holding the range highs. So you could look at this as a pretty aggressive retest so far. You don't really want to lose this high, because then that would look like a massive bearish deviation from the range if we come back into here. And then you can look to, well, I guess you have this CME futures gap, 7,600. So you could see 7,600. But I personally think if we come back into here, especially lose this, then you're probably coming down to much lower prices. So it's really, really critical, I suppose, that you do hold this now. You don't really want to be coming into the range, lose 7,600, and I think it's like game over, and you're going to get much lower prices to come. But at the moment, although a very bearish looking wick, it's technically still a retest of the range. So it's not the end of the world right now, although it might look very bad. Unless you come back into here, and then I think you got the futures gap 7,650, but it would be not good at all to come into that, but you just could fill the gap and come back up, and this is something where you have to review in the time. But yeah, really coming into here, I think you're coming back down and hitting those 6k levels again. So yeah, there's that as well. But currently as it stands right now, resistance is flipping into support. It's just obviously not too great of a candle to break the range. I've just seen this message come up that apparently my encoder stopped working. I'm not sure. Can you still all hear me? I just had like a message coming. I think you can all still hear me. Not too sure. I just had a big red error message come up saying that you couldn't hear me. I'm not too sure whether you can or not. But, yeah, we'll see. Yeah, this is really, really cool. So I need to show you all this. That Bybit, the exchange Bybit, they sent me these really cool gloves. So I have like a sell short boxing glove. This is going to be on a green screen, so you can't see it. But I got a green buy long glove and a red boxing. Yeah, pretty cool, isn't it? So yeah, shout out to Bybit for that. So yeah, maybe I'll use those gloves. Found both those videos about, yeah, no worries at all. I'm glad you found them. Yeah, they should hopefully answer all your questions, because they're not too complex to use, those exchanges. I had a weekly at 7860, which is also confluence of the 382, the whole move. Yeah, absolutely. 7,861. That is a weekly, 7,861. I know that 100%. So you are absolutely correct. 7,861. 7,861. Sorry. Okay, there it is. And let's put that as a weekly. Yeah, that was 100% a weekly. I just remove a lot of my levels. I do remove a lot of the levels. I just have like a little bit of OCD, I think. Well, and the fact that I get asked questions continuously in the day, so I need to clear up my charts. Oh yeah, but yeah, look at that. So we got very, very, very close, within $20 of that weekly before that bounce. But yeah, we're currently getting this SR flip of 8,017. So yeah, obviously support, potentially resistance flip. So you want to wouldn't long into this resistance, definitely. You don't want to long into this, wait for the trend change. Yeah, so maybe a front runner that weekly. But yeah, I would be a bit cautious longing until let's just say until we really reclaim 8,100. You might want to be a bit careful. Because that's obviously not too good. It's not too good that you sell off like this. But yeah, what I found really interesting is actually when we compare this to XAU USD. So let's see what that's doing right now. This was like a really good heads up. Okay, so let me just put that back on with nothing else on the screen. So yeah, XAU. So you just see how correlated these assets are right now. Where we had, this is gold by the way, where we had this big impulse in gold, Bitcoin followed, gold started dropping, Bitcoin followed at the drop. Literally. Gold made a new low here. Bitcoin made a new low. Looks like gold is currently trying to recover slightly. So I think what you want to watch out for is, let's see whether like gold takes this high. If it does, then we could look for Bitcoin to move up and take this high. They're just so correlated, it's unreal. It's not even like really lately. You look at the correlation, like the correlation is pretty nice. On like a medium term as well, range bound, breaking out of the range, broke out of the range. The heads up signal was on XAU US, well, gold was the heads up, and obviously Bitcoin, followed. So yeah, I like to see the correlation like this. I find it interesting. So yeah, if this is to follow, I would expect Bitcoin to move up here, if I'm honest. So yeah, we'd like to see this moving up just as XAU's doing. So yeah, that would be nice if Bitcoin moves up. And this is, to be honest, exactly what I said at the start of the stream. This is what I was expecting. This to lose, drop down one more time before the bounce. Would have liked the 6.6 to hold, but to me it makes no difference whether that held or not. I guess it's better the more bearish it was, because that I'm sure would have made people very bearish. But yeah, no, that's what I was wanting to see, something like, and that's possibly what we're going to get. So that would be very nice indeed. And the reason why I said this is because of what happens here. Okay, and then obviously what we just done here could be very similar to that. So we'll have to see how this plays out. Obviously, I'll update you in the group and give you these sort of predictions again, because that was just insane. Yeah, it was just lovely. Anyway, so cool. The video paused. Yeah, I'm not sure what happened there. My internet is generally really good, but not always, I suppose. Yes. I am back. All trades being in green, loving it. Well, yeah, Igor, you're a trading legend though. You're doing really, 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 really well. So yeah, shout out to Igor, very good trader. Yeah, the big sell-off had to do with the Trump speech. Like, yeah, I think like obviously as soon as Trump started speaking, this is obviously all about, this is why gold started selling off as well, because I'm obviously anti-war. I don't want a war, but Bitcoin started to sell off, gold started to sell off as soon as President Trump started speaking. So I do think this was definitely influenced by the news. Okay, it's just like as soon as he started speaking, we know that it's going to affect the commodities market. Okay, so with 99% certainty that it's going to affect these markets when he, what he's discussing. People use like gold as a safe haven. So it's nice to see the correlation, if I'm honest. But yeah, I do think Trump had influence on this downwards move. Yeah, I would say, yeah, to be honest, there was that. As soon as he started speaking, it sold off, so I can't deny that. Bitcoin to do a harmonic on BTC right now. Oh yeah, so that was your question. So let's put on the volume profile. And I'm not sure what exact time frame you were looking at, but well, the point of control is down at 7,200 of this range. Maybe you're looking at all of this. You're looking at all of 2019. So 2019 point of control, 7,985. Yeah, so yeah, that's really, really nice to see. So obviously, yeah, that would be brilliant confluence if we do move up from here, that you have come back down, back tested the 2019 point of control. Really, 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 that would be amazing. So yeah, again, this is like showing you that the support is there. Losing this is obviously going to be, in my opinion, very bearish, and it would be you would think that this is a fake out from the top of the range before coming lower. If you can hold this support, it's very, very crucial that you hold that, I think. If you hold this there, we can, well, I guess like I thought was going to happen, get this job and let's go back up to the daily. If this plays out, it'd be nice. But yeah, that's what I thought was going to happen. And you really do want to see, you don't want to see this really closing below, the low of what that move was. So 7,861, that weekly you don't want to see lost. Okay. So yeah, that would be very, very nice indeed. And we are moving up. So nice. I'm not 100% sure. If I'm honest, I'm not 100% sure when I'm going to start doing a videos course. In terms of like, yeah, I want to do it, but like the start of this year is so far pretty busy. I want to get some. Yeah, I can't give you an exact date if I'm honest with you, but obviously I would like to do it sooner than later, but I can't give you an exact date. Daniel, do you still take a look at so the question, do I still take a look at weekly levels from like back in 2018? And here is your answer, I suppose. Yes. So I've got like a weekly level marked here, a daily level marked here. You have to remember, I am removing things from my chart all the time. But for example, like this, we could still have as a weekly. You see the difference in some of these levels. So like here is a weekly from 2018, and then in 2019 it was also a weekly, and the difference is less than $50. So you're going to see that, yeah, like these levels coming in back into play. Like, yeah, so the 2018 levels are important, but I always place more importance to the right hand side of the chart. So when I am marking levels, I place more importance in 2019 than I do in 2018. So in that regards, I place more importance to what's happening now than what happened back here. Hence why I'd have this level and not this level. But yeah, these levels are still important nevertheless, but I place more importance on present to past. Okay. This is lovely. This is exactly what I wanted to see. So bounce off to 618, come back down, move back up. Let's go. Yeah, it makes me happy. Bounce from 786. Shall we look for the butterfly? Well, I think the way that the harmonic that I would have on this one, let's see if we got one on a higher term time frame. Okay, so from a higher term, let's just remove everything a second. Okay. Oh, where was that one that I posted the other day? That would have been, well, we have like a really, really, really big harmonic, and that was from X to A. Again, the symmetry on this one was not great, but we have we have this possibility. This is why it's like 13k by April. Again, this is one that I would trade straight off the bat. Like, I'm obviously not longing here and expecting 13k. I trade it level to level to level to level, but this is like a really nice harmonic to be aware of. On a lower term time frame, I think on the lower term, I think we can get a really nice channel on this, and I prefer to just channel this because it looks like it's going to go quite nice. So if we move it to here, yeah, that looks pretty nice. In terms of looking for confluence at the midpoint, where we can see resistance on the midpoint, support on the midpoint, and then not really much support found there, but that would be nice, you know. again, so this is another really important channel support. I'd prefer to just chuck that on. If I'm honest, that's what I would look at next. This is really, really, really important trend line. Again, because losing this trend line now would also probably mean losing that weekly, which is very bearish in my, well, at least the CME gap first. But yeah, I'd have this channel on. Yeah, I mean, yes. I mean, I'm going to look for longs on this, to be honest. Even if it's just a relief bounce. Even if we just get a relief bounce back to the midpoint before back down. Yeah, I'm going to look to long into this. But what I'll do is I'll end the stream now. And I'll give you my updates in the group chat. Okay, so I will give you this update in a group chat. But I'm going to actually go in here and review what's going on a bit more before I say exactly how I'm going to be trading this. Because I've been on the stream not really reviewing what's going on. So I want to, yeah, give me like 10 minutes and I'll update you with what the trade I'm going to take, okay? And I'll post that in the group chat in a second. Well, give me 10 minutes because I do kind of want to review what's happened in this job. I've not really done it. So, yes, thank you for joining me tonight. Hope that you thoroughly have enjoyed this live stream. Where we've went through harmonic patterns and then reviewed a little bit of Bitcoin. OMG was a bit of a no-go from the start, wasn't it? So yeah, that was a bit quick. But you know, yeah. There we go. Hope that you've enjoyed this live stream and it's been beneficial to you. I'll see you next week. Obviously, you know, back to normal now, back trading. So see you next week on the 15th for the contenders live stream, or for all the champions. I'll see you on the 12th. Obviously for the champions live stream where we do our live trades. But yeah, in the meantime, I'll see you in the group because obviously I'm active in that all day, every day. So yeah, I'll catch you in that one. In the group where I'll update you on the trade I'm taking. So yeah, thank you everybody so much, and I'll catch you in the next stream or in the group chat. Cheers and good night. Thanks. Bye. Bye.